Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Tuesday, and we're sitting here at the 22nd of November, 2022. Sorry about not putting out an update for you last night. I have family in from out of town, getting Christmas trees up in the house, getting turkeys ready to be done, hanging around with the turkey all day. What can I tell you? I'm sure you're going through something similar. Tomorrow is a huge day of reports. Mortgage Bankers Association, Advanced Durable Goods Data, U.S. Weekly Claims, S&P Global Group, the U.S. Preliminary Manufacturing and Service Sector PMI, New Home Sales, University of Michigan Final November Consumer Sentiment, Natural Gas Report, Baker Hughes count going to come out way early, minutes from last month's FOMC meeting, and the EIA petroleum stocks are going to come out. You think that's enough? I mean, you got market movers all over the place tomorrow. Be aware of that. It's also volume is thinning out. Trade is getting thin. I feel very good in still saying we're going to get a very strong end of the year rally in stock indices. The dollar's the big question. It's been a whipsaw market. I don't think had it been for the holiday and a bad report, I want to use that word very clearly, I don't know that the word bad is right. Well, we got yesterday the idea that OPEC was going to increase production 500,000 barrels. Markets went crazy. Dollar took off to the upside, blah, blah. Then today it's a total reversal. Energy prices strong once again. Energy's under threat tomorrow because tomorrow's the date that the European Union has to ratify one way or the other the cap on the price, set a cap for oil coming from Russia, and get the wrath of Russia, which is definitely going to happen. Don't be surprised if Russia turns off natural gas completely into Ukraine for shipment elsewhere. They're already saying today, they laid the groundwork, Ukraine is keeping a lot of the natural gas. Sure they are. Where are they putting it, my friends? You've destroyed a quarter of their infrastructure. Quarter of the people in Ukraine are without power. What do you think they're going to do with all this? It makes me laugh. Not laugh only in the sense of how stupid, crazy the Russians are. For the people of Ukraine, let me set that straight. My heart goes out to them. Absolutely. Okay. So where are we in all this in the metals? Well, as long as the dollar stays under pressure, I think they get a bid. But there's something else. Copper's telling us something. Did you take a look today at the amount of cases reported with COVID in China? Huge. Back up to the April record numbers. Just shy of them. Yet copper's up today and up tonight. Something's brewing here. It's not that the numbers aren't there. I don't think China's going to make the full pivot than the market thinks. A lot of people thought they'll go in the full lockdowns again. They gave us a game plan. I think their economy's hurt so bad that behind the scenes, there's other things going on that people, you and I don't know, are buying this market still. What else makes sense? Because if they go into a full shutdown, as these cases keep going, you don't need iron ore, you don't need oil, you don't need copper production. I mean, the factories start shutting down on you. So I pay attention to those things. Bonds and notes still getting something of a bid. So you can see all the reports. Now let's go back to the chart action and go to the next chart. In the gold market, the market's gotten over, and it's staying so far over the 18-week average, but it is down for the week 0.75 of a percentage point. And remember, you only have a day and a half left this week. You're not open at all on Thursday. You have abbreviated trading hours on Friday. So the week is quickly coming to a close. The market has had a setback, as you can see. The pattern is still one of higher lows and higher highs on the swing line. When you take a look at where support is and what else is happening, I get excited. You're very close now to where the 18-day average of closes is going to have a bullish crossover over the 100. When that happens, if price is still over it when that occurs, it's often a sign the market wants to go higher. Nothing's all the time, but I'd be looking at that in that manner. The resistance of the market's very well defined all of a sudden. It's the Bollinger Band and the 200-week average of closes, and support's being defined by the 100-week average and the 18-day average of closes. And you had an embedded reading that often When it's lost, which it was done in the past 72 hours, when it's lost, price often drifts back into the major support under the market, trying to get its footing. Should be an interesting day tomorrow. That's all I can say. The gold-silver ratio, well, silver lost to gold since the beginning of November, and now it is turning backwards, starting to gain on it. You see that on the chart here. But silver, too, is caught. Silver, when it got up to the 200-day average in the upper Bollinger Band, I think that was a big problem for the market, a major problem, where the market decided then to set back a little bit, back to the 18-day average. It had had an embedded reading. For those of you that have taken my enhanced Bollinger Band course, this is so darn important. The percentages when you lose an embedded reading of the market returning to one of the closest moving averages under it, if it was a bullish embedded reading, are very, very high. Nothing is 100%. If you're looking for it to do all the time, this isn't it, because I don't know anything that is in charting. Is it extremely high? Well, depends on your definition of extreme. To me, it is, by my definition. When I look at the copper market, do you see the battleground? I mean, it's so crystal clear. You're stuck at the 18-day average of closes. You're not in a bullish or bearish formation just yet. You get bearish again if you take out 355.60. That would give you lower highs, lower lows. But temporarily, there's nothing that's bullish. All that's happening is it's decided not to go down, is it's corrected. You had an embedded reading, you lost it, you went to that 18-day average and you're holding it. When we look at the platinum market, you had an embedded reading, you lost it, you came back to the major moving average of the 18-day average, you're holding it. Am I making a point with you with this Bollinger Band? Just got overbought here, a whole different game. You did get up, though, into key resistance a week ago of the 100-day average in green, the upper Bollinger Band, and you came smashing back down. We'll see where it wants to go. I would have thought if the China situation grabs hold and they shut down factories, I would think more and more metals would be under pressure that are used in industry. We'll see if that's the case or not. In the dollar index, this is a bear market rally, not to start on my work at least of a new uptrend. It's a bounce in a bear market, but you lost the bearish reading and you didn't gain it back. It still has an open upside target of right here, 108.87 to 108.92. Folks, that's far away. That's 170 points away. That's bothersome to me, real bothersome. So if I'm long currencies against the dollar, I have to be considering maybe do I take some money off the table? I don't like what I'm seeing out of that. That's one of the ways that I'd be thinking. You keep hearing me talk about the Bollinger Bands. Well, you can get them. If you take a look at the ad right after this, it explains how this all works, where you're at with it, what you do with it. The course is not expensive. $90, gives you charting software, 13 videos, teaches you from start to finish, and gives you free 2-week access to both my Spider and my morning subscriber video. Those values alone turn out to be on the neighborhood of about $30. For 1 month, you're going to get half a month. You're going to get 2 weeks of that. And then the charting software that we have is about a $60 value. You'll get that for the whole month. So you have a pretty good value. It's almost the price of the course by itself. How do you look at it and learn more? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever. but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.